Dear friends, today we're going to talk about important news for the whole cryptocurrency market. We'll discuss that Alex Mashinsky had withdrawn $10 million before Celsius operations were blocked. Also, we'll talk about the SEC accusing Kim Kardashian of illegal advertising of EthereumMax. And we'll talk about all the big news. You're on the Make Money channel. Let's get into it all. The CEO of crypto lending platform Celsius Network, Alex Mashinsky, had withdrawn $10 million a few weeks before the client accounts were frozen. The Financial Times reports this citing unnamed sources. According to the report, this happened in the midst of a wave of sales in May caused by the collapse of the Terra ecosystem. Celsius is expected to provide details of the CEO transactions as part of a wider financial disclosure. A representative of Mashinsky said that the service head and his family members had $44 million left in their Celsius accounts after transactions had been blocked. The company spokesman said the CEO withdrew a certain amount, most of which went to pay taxes. According to one of the sources, this took $8 million. The remaining $2 million was linked to an estate planning operation. The report called that under the US law, payments made by a company 90 days before its bankruptcy can be returned to all creditors. As a reminder, the crypto lending platform suspended withdrawals, exchanges, and transfers between accounts on 13 June. A month later, Celsius and some affiliates filed for insolvency under Chapter 11 of the US Bankruptcy Code. The platform's liabilities exceeded its assets by $2.85 billion. In August, the US trustee program said that there were numerous questions to the firm's management. Prior to that, FT had reported on Mashinsky interference in the implementation of the crypto lending platform's trading strategy, which was worth millions of dollars. In September, the CEO presented a plan to save Celsius from bankruptcy, according to the media. Mashinsky later stepped down from his position. Dear friends, if you like this video, please like it and subscribe to this YouTube channel. Let's grow together. Further in the news, we have that the CEO has accused Kim Kardashian of advertising EthereumMax illegally. The US Securities and Exchange Commission (SEC) has accused the photo model and actress Kim Kardashian of illegal advertising for the EthereumMax altcoin, EMAX. According to the agency, the celebrity filed to disclose that she received $250,000 for an Instagram post about security tokens offered by EthereumMax. Kardashian's post contained a link to the project's website, where potential investors were instructed to purchase EMAX. By doing so, the star violated the Federal Securities Act in terms of prohibiting advertising without disclosing the nature, source, and amount of compensation received in exchange for the promotion. Investors have a right to know whether an advertisement for a security is objective, the SEC claimed. Kardashian will pay $1.26 million in penalties, interest, and reimbursement for illegally obtained profits. She has also agreed not to advertise any digital assets for 3 years. This case is a reminder that celebrity-promoted investment solutions are not automatically suitable for all investors, Gensler said. The EthereumMax altcoin became widely known in spring of 2021. On May 26, former NBA star Paul Pierce published a promotional post on his Twitter account. Within days, the price of EMAX peaked, then dropped by more than 80% in 11 days. Recall that in January 2022, a lawsuit was filed in the Central District Court of California against Kardashian, boxer Floyd Mayweather, and 8 other people. The investors accused them of colluding with project managers Steve Gentile and Giovanni Peroni to mislead them about control over most of the tokens. In August, the lawyers tried to contest the class action claim against Kardashian for promoting EthereumMax. The defense insisted it was unproven, that it was her advertising post on Instagram that motivated investors to invest in the token. Now let's move on to more significant news for the entire financial market. What we're talking about is the rumors of a potential Credit Suisse bankruptcy. Credit default swaps, CDC, on the debt of one of Europe's biggest investment banks, Credit Suisse, have soared to record levels since the 2008 financial crisis. Such high figures indicate a 23% probability of its collapse over the next 5 years. From the heights of 2009, the Swiss bank's share have plummeted by 90%. The securities of Germany's largest financial institution, Deutsche Bank, showed a similar trend. Credit Suisse shares were down 12% in trading on 3 October. The market ignored CEO Ulrich Körner's assurances that the bank had sufficient levels of liquidity and capital. In a note to the employees, the top manager admitted that the organization was going through a critical moment. Kerner will present a revised strategic plan on 27 October. Credit Suisse said in September that it was considering downsizing its investment business in the US. There is also the splitting of the organization into 3 separate constituents and the sale of the Global Trust Bank among the options. In addition, the financial institution is ready to lay off 5,000 employees. A deterioration in market conditions against the backdrop of tighter monetary policy and signs of recession in the global economy may have affected the bank's position. Credit Suisse may admit losses as a result of failed debt market investments, including Citrix bonds $600 million. Credit Suisse is also the defendant in a $1.27 billion lawsuit against Georgian Prime Minister Bidzina Ivanishvili, who was defrauded as a result of incompetent wealth management. Credit Suisse is not the only major bank whose shares have fallen below an alarming 40% on the price-book value multiple. There are Deutsche Bank, Societe Generale, Standard Chartered, Credit Agricole, UniCredit, Barclays, and Bank of China on the list. The market is concerned about a repeat of the Lehman Brothers collapse and the domino effect. The collapse of one of them on the list could jeopardize the survival of the others, Gold Money head of research Alasdair McLeod is convinced. Speculation on Credit Suisse insolvency as of 1 p.m. MSC Kiev did not extend to market sentiment as a whole. The S&P 500 futures are traded in a week plus. Bitcoin is rising 0.5% to 19,140 and Ethereum is up to 1.1% to $1,290. Earlier, there was a surge in purchases of digital assets for the specified fiat currencies amid the establishing debt markets and the sharp devaluation of the British pound and the euro against the dollar. Thank you for watching. Do not forget that we also have our Telegram channel, which is in the description below the video. Also, do not forget to subscribe to the channel and of course like this video. Make money!